Hello everyone, welcome to yet another episode of Your Life, Your Money. People often build buildings without laying the proper foundation. I am referring here to financial planning. When we talk about financial planning, everybody remembers stock markets and the various instruments to invest in it. But to have a very optimal result, to have a stable result, and to depend on the outcome, what is required is a foundation that should be laid with the help of fixed income. People have forgotten that there is something called fixed income. Today is a time where you have to revisit fixed income all over again and find out why it makes absolute sense for you to invest in fixed income in today's circumstances. Don't miss many of the points that I'm going to discuss in this video. I will take you through the finer steps of the art of investing into the fixed income in this video. Stay till the end of the video. This is NRI Money Clinic and I am Dr. Chandrakant Bhatt, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
When we talk about investing or financial planning, the image that comes in your mind is about investing into the stock market. People think investing into the stock market through its various components like mutual funds, unit-linked insurance plan, ETFs, index funds, direct stocks, PMS, AF is what constitutes financial planning. Financial planning has more to it than just the stock markets. Stock markets make news once in a while. So the bull markets are not there every point of time. Bull markets come and go at some points of time, but not every day you see a bull market. There are four components I can think of which you should consider when you do the investing. Number one, fixed income. Number two, commodities. Number three, the rentals. And number four, the stock markets. When you have all the four, then your planning remains correct. But if you become tilted towards the stock market, then what happens is, if the times are in your favor, you may make tons of money. But if times are not in your favor, you may be made to wait for a longer period of time. If your selections are wrong, you may tend to lose money. All possibilities exist. That is why people say asset allocation is the cornerstone of any financial planning. While we say that you should have all the four, fixed income, commodities, rentals, and the stock market instruments in your mutual fund portfolio, which one should you start first in your life? The first thing that you start is the foundation of your financial planning. When you construct a building, how do you construct? You put it on a drawing map first, put the foundation, and then you start building different floors and you start constructing, and then you move to that elevation part. The same process follows in financial planning too. The foundation of your financial planning is fixed income, not commodities, not rentals, not the stock market. Unless you put a rock solid foundation, the superstructure that you are going to construct on this with other instruments will tend to fall down or prone for all kinds of an accident. This is a lesson that we have to understand. First, put the foundation. That gives the strength for you to construct other floors right above this. The foundation here is the fixed income. If fixed income is the foundation of financial planning, why do people neglect fixed income? Why people don't get attracted to fixed income? The answer lies in the situation they are going through. Suppose if there is a raging bull market, then the returns from fixed income looks unattractive compared to what you see in the stock market. What happened in the last 3-4 years? In the last 3-4 years, we had a massive bull run. But people forgot that the stock markets have not done anything for last about 1.5 years now. The stock market is at a level where it was about 1.5 to 2 years before, which means to say stock market did not give you any return in the last 1.5 to 2 years. Now, if the stock market does not move for longer periods of time, people will start thinking about the fixed income all over again. Yet another reason people are not talking about fixed income is argument that it does not beat inflation. No fixed income instrument can ever beat inflation. That's not possible. That's the property of fixed income. Fixed income can stay in line with inflation. Fixed income will not beat inflation. That's not the property of fixed income. What beats inflation is your investments in the stock market. They do beat inflation, but over the long run. In the short run, they may go into the negative territory, forget about beating inflation, they may have negative values. So each instrument has its distinct property. Fixed income does not beat inflation. It doesn't mean that it will erode, but it can still stay in sync with the inflation. That's possible. Yet another reason people don't look into fixed income is because of the taxation. People say, I don't want to do fixed income because I have a bank fixed deposit. The bank fixed deposit has taxes which come along with that. It's an accrual tax. When the bank pays you an interest, whether you take out the interest or not, when you're filing the tax return, unless it is an NRI you are required to compute the interest income as your income of the year, and you have to pay the taxes, which means you are shelling down a big amount of your interest that you gain as the taxes, which makes it unattractive. And there is another set of people. For them, fixed income is just not attractive. You know the reason? They think it's very boring. In a stock market, you have that excitement and you know the ups and downs. You have a point to talk during the evening parties or your friends get together. Fixed income is very boring. These are the reasons why people neglect fixed income. While I don't dispute the fact that I listed already, the grounds given by some people not to look into fixed income, but fixed income has very interesting things to note also. It has its virtues, it has its negatives, it has its virtues. Every investment avenue, what I spoke of, has its pluses and minuses. Stock market, rentals, commodities and fixed income, they have their pluses, they have their minuses, both. And we have to look at the virtues and use it appropriately. What is the reason why people have to invest in fixed income as a compulsion, as an obligation? Why? Number one, fixed income is real. Whatever the interest you get, whatever the coupon you get, it is real. That means you get paid with this interest. You don't have to worry about whether I'll get it or not. However, you invest in a mutual fund or a stock market or land or anything where you depend on capital appreciation to make money, that means you are depending on the whims and fancies of the general public to come and buy that instrument for you to make a profit. Whereas in case of fixed income, you are depending on the institution where you have parked money. It could be a bank, it could be a corporate, it could be a government bond, whatever it could be. The institution, the strength of the institution, the business underlying it will pay you that coupon or pay you that interest. So the returns that you get from fixed income is real and it is dependable at all points of time. You don't have to live in a dilemma. Will I get that money or not? Will the market go through a volatile phase? That thing is not required. That is why when you look at the total amount of money which is there in a economy, a great deal of money, more than 3/4 of the money is parked in the fixed income. Most people are wise, institutions are wise. They don't go and put the money in the stock market irrationally. It is the general public which goes and parks the money in the stock market in a very irrational way. So more than 3/4 of the money which is available is parked in the fixed income. Why you should be doing it some other way? The fixed income gives you a regular cash flow. You don't have to wait, you don't have to ask, you don't have to remember. If it gives you an interest on a monthly basis, quarterly, half-yearly, whatever it is as per the agreed term, you keep getting a cash flow without being asking for it. Another great virtue of fixed income is it is liquid at all times. That means you need money. You can close the FD, you can sell the bond, you can close the debt fund of your mutual fund. So it is liquid at all times. That's a great virtue that you can look for. Your fixed income portfolio does not have the volatility of a stock market. Today you feel very happy about the stock market. Sensex touched 86,000. 6 months down the line, Sensex dropped to 72,000. So your investments, what you have invested in, if it becomes very volatile, it becomes very difficult for you to depend on it in case if you urgently need money or you are depending on regular cash flow to sustain your family. Fixed income has no volatility or manageable volatility. These things makes fixed income very attractive for investment purpose. Now that you know of the advantages and disadvantages of a fixed income, now let us look at the reasons why it makes a compelling case for you to invest in fixed income in current circumstances. Let's look at the fundamental reason why you should invest in fixed income. As I said, it is the foundation of financial planning. Unless you have a proper fixed income portfolio, anything you do beyond that can become a problematic thing for you. Therefore, if you have not started the fixed income, it's time for you to start the fixed income portfolio. As I said, your investment should have at least 4 asset classes. Fixed income, which is the foundation, commodities, the second one, the rentals, and the fourth is the stock market instrument. You may be having 1, 2, you may not have all the 4. But if you don't have a fixed income, that's the foundation, that's the first thing, that's what you should focus on today. The second reason is part of the asset allocation. Every asset does not perform on a daily basis. When we speak about commodities will not perform every day. Stock market will not perform every day. Rentals will have the liquidity issues. Fixed income is real. So you should have all the 4 instruments. When you have this, you can be very certain that one or the asset class will keep on performing on a daily basis and your portfolios will be constantly moving up and gives you that stability in your investment. Another reason fixed income becomes very attractive today is both in dollars terms as well as in the INR, interest rates are at the peak now. In fact, they have come down slightly from the peak rate. RBI has brought down the interest rate twice in this 1 year period. So it is almost at the peak rate at this point of time. I've spoken in many of my videos how in India interest rate dropped from 14% all the way down towards about 4% in the various cycles. The current cycle, the interest rates peaked at 7% and today it is at about 6.5% or so. If my guesses are correct, I don't think in your lifetime you will see this kind of an interest rate again in your life. The long-term interest rates are going to be down. I do not think this cycle will bring down the interest rate to a great extent, but it is definitely possible that it will see the low of the previous interest rate cycle, which is about 4 to 4.5%. That is likely to happen. But the long-term trajectory of interest rate is down. So it makes absolute sense for you to lock into the current interest rate for as long as possible. If it is 10 years, 15 years, 20 years, 30 years or your lifetime, if you lock into this interest rate, you don't have to worry about the reinvestment risk that comes with your bank fixed deposit. See, in a bank fixed deposit, you can lock in your interest rates only for about 10 years or so. But what happens at that point of time when the FD matures? You have to reinvest that money at the prevailing interest rate. Obviously, the future interest rate is much lower than what it is going to be today. So it makes sense for you to lock into this interest rate wherever it is possible for the longest possible period. Let's discuss that as we progress in this video. How you can do that, I'll explain to you. Those of you who have thought about not investing in fixed income for the reason of taxation, I'll tell you there are ways and means for you to manage the taxes. For example, there are accrual taxes. That means you earn interest and you have to pay taxes. But the same fixed income, if it can be postponed to a future date, that means if it does not come in accrual, but it will come as a long-term capital gains tax, which goes into the future, instead of paying taxes, you pay the taxes in the future. So that can become a management of taxes. Likewise, there are certain benefits given by government which will prevent certain taxation. For example, now government has given exemption for you that if you invest about 5 lakh rupees per person per year in the guaranteed return insurance plans, then the entire lifetime you have to pay 0 taxes on it. And it's very attractive. Don't get attracted to what YouTubers talk about, this IRR and other things. IRR is a misused terminology. What people have to really look at is not just the IRR, the post-tax IRR. That tells you a different story altogether. For the length of the video which I am doing today, I can't get into every specific detail. Just remember, when you are calculating the IRR, instead of calculating the IRR, calculate the post-tax IRR. That will give you a much better clarity about the instrument what you are choosing. So there are instruments where you can invest in fixed income. Either you can defer the taxes or you can bypass the taxes. Legally, the facility is given by the government. I spoke to you about one such instrument. The other such instruments could be the annuity plans. If you buy a deferred annuity, your taxes will move into the future. From the time you buy an annuity till the time the annuity, the cash flow starts, whatever the gains you make will remain tax-free. So there are different possibilities are there. Then you can build combo portfolios. When you build a combo portfolio, by making it long-term capital gains tax, a great deal of taxation is possible to be managed, reduced, negated. All possibilities exist. If you are someone who is neglecting a fixed income because it comes under taxation, make no mistake, there are ways and means it can be quite comfortably managed. One another compelling reason for you to invest in fixed income in today's circumstances is uncertainties of the future. I will tell you something which I have observed during my 30 years of experience of investing, spending time in the stock market. Number one, when markets go through a peak bull market and markets correct from there, they will not recover and cross the previous peaks anytime in a hurry. You want a proof? In the year 2007, markets made a peak of 21,000 and they corrected to 8,000. Do you know when the markets took out the 21,000 again? That was in the year 2014 or 2013 end. How many years later? Literally 6 to 7 years later. Now the Sensex made a peak of 86,000. It dropped down up to 72,000. Currently, at the time of recording this video, we are at 79, 80,000. So market is moving up, coming down, but it will not cross the previous peak in a hurry. That means market is spending time. It gives you an impression that, oh, market moved up by 600 points today. But if you look at the range, it is remaining to be static for some time. So it takes time. Eventually 86,000 on the Sensex will be taken out, but that will not happen in 1 month, 2 months, 6 months, 1 year. It's unlikely that it will cross that. And when it crosses, then there will not be a peak upsurge. That will not happen. What will happen is it takes time to cross it, then it will go through a creepy up move. Then at some point of time, few years down the line, another bull market might start. This is what's going to happen. That means anyone who is investing in the stock market today have to keep at the back of their mind, their patience will be tested. For your patience, you will be rewarded in the long term. That's no doubt about it. But in the interim, your patience will be tested, your discipline will be tested. However, the fixed income will not rest even for one day. Fixed income constantly keeps making your portfolios move towards northward. So fixed income has no rest. Stock markets take a breather many a times. It can be for the many years. Look around the world, what's happening. US is facing a recession. There is a tariff wars which are going on. Today morning I saw on the television, Trump is going to declare war on the Middle East, the Iran or Houthis or whatever it is. I didn't listen to the full speech. So there is turmoil there. There is turmoil in Ukraine and Russia. We know what's happening between India and its neighbors. So there are many uncertainties which are encircling us today. When the markets are filled with so many uncertainties, the sentiments of people get affected. People coming in large hordes and putting money into the stock market appears to be a difficult situation at this point of time. So the peak interest rate, uncertainties of the future, your neglect to asset allocation, the reason that the fixed income should be a foundation of your financial planning makes the fixed income the best instrument for you to invest today. Now, you are convinced that there is a compelling case to invest in fixed income. Now let's look at, is it very easy to invest in fixed income? There is nothing great, right? The investing in fixed income is simple, but it is not easy. Why it is not easy? Because you have to attend to multiple things. For example, taxation. Which instrument shall I choose? How will I manage inflation? Is there volatility? Is there default risk? Should I put exposure control on the instrument that I choose? Should I invest in a fixed deposit? Should I choose a bond? If I have to choose a bond, which bond I should choose? Should I go in towards the annuities? Which type of annuity should I choose? Should I use a deferred annuity? These days, annuities come with so many options over there. So this can make things complex for you. So in my personal opinion, and as per the observations that I have made, it is absolutely essential for you to take the help of financial planners to build a good fixed income portfolio. If you have an intention to use the services of a financial planner, you can make best use of services provided by NRI Money Clinic to build your fixed income portfolio for you. How can you reach out to us? Very simple. Our number is given in the description box below. We have provided a link over there. Just click on the link. It takes you to the WhatsApp. Write the message fixed income solution and send that WhatsApp message, and our team of experts will get in touch with you to help you build that fixed income portfolio to suit your requirement. When we build your fixed income portfolio, we will do what is known as a fact find session. A fact find session is to know what's happening in your life, what's your risk profile, when will you retire, the purpose of this investment. Based on this, the various instruments are chosen and a fixed income instrument portfolio will be built for that. If you have an intention to use this opportunity, don't delay, send that message now. For those of you who don't want to use the services of a financial planner, don't get disheartened. I will tell you a few things what you can do about. I'll give you the list of instruments where you can invest. Beyond that, it's left to you what you want to do with. Number one, fixed deposit. When you're investing in a fixed deposit, be mindful of the institution. The institutions which are weak will give you a higher rate of interest. So if you are somebody who is retired, about to retire, parking your retirement funds in such institutions, you have to be very, very careful. Don't park all your money in fixed deposits where the banks gives you a very high rate of return. At best, avoid the small time cooperative banks. They are not very safe for you. You can invest in bonds. There are different types of bonds. You get bonds from Government of India, you get bonds from the state government, you get bonds from corporates. There are multiple types of bonds out there. Bonds have two types of risk. One is the liquidity risk. You bought a bond, if there is no buyer, you may get stuck and you may have to wait till the institution pays you on maturity. So it may have a liquidity risk. It will also have a default risk. A default risk is the institution has floated the bond, but it doesn't have the money to pay for when the maturity time comes. That's a default risk is definitely possible. You have seen in the recent past what happened with the Franklin Templeton credit risk fund and what consequences did follow. So there is a default risk in case of the bonds when you buy. You can buy what is known as the debt funds of the mutual fund. Again, very complex issue. Various kinds of debt funds are there. Their behavior at times changes because of the interest rate cycle or what's happening in the economy. You should have the knowledge to choose the right type of debt funds. My best suggestion is, if you want to go through the debt funds of the mutual fund, build a portfolio. Don't lock into one type of debt funds or pick it up from one place. That would be the best solution available for you. Guaranteed return insurance plan, very attractive. Government has given you tax break if you invest up to 5 lakh rupees per year per person. For lifetime, you have a tax-free cash flow. It is something which no one should lose this opportunity. This is something which is given. Look, when you save on the taxes, that's the easy returns that you have made without any effort. And when government has given you this benefit, make most out of it. Which guaranteed return insurance plan to choose from? Again, a very complex issue. Each company has a different metrics and their products have also evolved. And these days you have got the products which can be designed to your specific needs. I would suggest, if you want to use the grips, it's better that you go through a financial planner. If not, you can also choose yourself. One another instrument that you can choose is annuities. Those people who want immediate cash flow, you can go for the annuities, the immediate annuities. If you don't need immediate annuity, I need cash flow in the future, you can go for deferred annuities. Again, very evolving subject. A lot of products have come in the market. Several innovations have come in. Again, in my personal opinion, if you want to choose a deferred annuity, best go through the financial planner and they will help you choose the right one after they do fact find sessions with you. Recently, we had done one video on fixed income in dollars by Mr. Sanjay Guglani. I will show you the thumbnail of that video here. You can revisit that thing. For those of you who want to invest in dollar fixed income, that's very, very attractive. But again, not available for everyone. It's a high ticket size product. But very, very attractive, no doubt about it. If you want to invest in those dollar plans, please do reach out to us. We can help you and figure out whether you are eligible to invest in that or not. So dear viewers, I have given you everything possible about fixed income, why it makes sense, the plus and minus of fixed income, why it makes a compelling case to invest in fixed income today, and what are our services and what are the instruments available for those of you who are DIYs to look for in the fixed income space. Hope the video that I have done today helped you to understand finer points of fixed income investing. If it helped you, do give me a thumbs up. Do share these videos with the near and dear ones, friends and relatives, and on all the social media on which you are connected with. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another topic next week, same time. Till then, stay safe. Jai Hind.
Press the bell icon for more details and subscribe our channel.